Alright, I want to welcome everyone, especially to this free Forex and crypto class. Today being 10th February. Okay, in case you're wondering, what are the days we do the free Forex and crypto class? There's no specific date, okay? All we do is we're gonna inform you and alert you on the mentorship platforms and some of our social media platforms, just to let you know exactly when we will be having the mentorship opportunities. So all I'm gonna say is, anytime you find us having a class like this, just take advantage of it. The course of the week, I had some few people contact me and they said they wanted to learn Forex, and some of these people, I'm so sure that the free class might not be enough for them, and I suggested that they should subscribe for the VIP, and it wasn't quite a good thought for them because of the cost of VIP, which is just $100. And for such people, I just advise that they should take advantage of the free classes. Probably when you attend the free classes, you could actually still learn some few things there that will help you. So quickly, we're going to dive into the charts. We've had our review session today, so we can actually wipe off the drawings on our chart, so we can be able to use the chart for a few today. So I'm going to remove the drawings and I'm going to remove the indicators. So this is our free class, and in this class we wouldn't be talking about we will talk about the strategy in full. Okay, so if you want to have the strategy, what you need to do is you will need to subscribe to our YouTube channel. Okay, so subscribe to the YouTube channel so that you can be able to have access to our strategy, because that's actually the first thing. Some people are waiting for me to talk on the strategy. There's some classes I've actually done that, but you see, if I start talking of the strategy in this class, we might not be able to touch a few of the things we want to talk today. So that's why it's YouTube, and that's why there are previous videos. So when you subscribe, you make reference to maybe a previous class or a video that was done as pertaining that strategy, which is our best day trading strategy. So two things I actually want to talk about in today's class is, number one, I want to talk about rules. And number two, I want to talk about risk management. Okay, so I think these are two interesting topics that will help you. So today's class is basically focused on channeling your potentials towards succeeding even better in the course of the new week. That's one vision you must have as a trader. You must seek to outdo your past. You must seek to be better than yesterday. You must seek to improve. So on rules, if you're gonna write what are my rules. For me, I'm gonna say, what are your rules? Do you even have you're gonna find that a lot of people who get in trouble during trading are those who don't have rules. I just want to admit everyone trying to comment. Okay. So you've been admitted into the class. Is there anyone who's trying to comment? I'll keep checking. I checked previously, I didn't see those who were coming. So please, if you tried before, you can try again. Then I said two things: rules and risk management. The first one is, what are your rules? So I'm going to ask again, what is your strategy? Some of you are mentoring and you hear me ask you a question, what is your strategy? I'm not saying that you must use my strategy. You got to use a strategy that works for you, okay? But what is your strategy? Are your strategies bounded by rules? You want to know mine? Then you got to look at the video, the best day trading strategy. So in the video you see my strategy, and that way you can be able to know what we do. That way you can be able to know what we do. So for me now, to you, what's your rule? What's your strategies? What are your strategies? What's your strategy? Okay, stick to it. So if you have a strategy, in case you don't have, please try to get, if you make reference to our strategy, just in case you want our strategy and you now work with our strategy and you use our strategy, you got to stick to it. Okay, so the next thing is stick to your rules and strategy. So but the most key for this is sticking to your rules, and I'm going to show you that on the chat. Trying to get someone into this class, I'm going to show you that on the chat. So what is your rule and what is your strategy? For us, we trade smart money contract, we trade ICT, right? Smart money contract, ICT, we trade psychological level, we trade price actions. So if you want to watch the video and see these things I'm listing, so I gotta let someone in. Okay, so welcome. So when you want to our video on strategy, you gotta see these things. So we trade smart money, we trade ICT, we trade psych levels, we trade price actions. And my advice for you is, you gotta keep studying. Since this is the strategy we use, you're gonna keep studying on SMC. So now it's weekend, the new week is coming. You gotta study on SMC, study on ICT, improve your knowledge. If there are things you're not getting right, you gotta learn them and get it right. Study about psychological levels, study about price actions. There are books on price actions as well. You got to read these books. Now when you look at these strategies, they have rules. The SMC has a rule, ICT has a rule, psych levels have rules, price actions have rules. And it's your responsibility to stick to these rules. During the review session, I already spoke about the importance of sticking to rules, and I'll say a few now in this class. The reason is because if you do not stick to the rule, and at any time there's a problem, there's going to be a problem. Don't you understand? So the reason, so I said the reason most traders, okay, sorry, I gotta share my screen. The reason most traders get into problems in trading is because of they don't stick to the rule sometimes. Okay, so they don't stick to the rule, and and for some traders, they they um, they don't stick to their strategy. So you're jumping from one strategy to another. You're jumping from one mentor to another. So you're unstable. You don't have stability in what you do. So that can put you in problem. So you have to have these things in check as you're preparing for a new week. So my screen was not being shared initially. So I'm sure you didn't see some of these things, but this is what I started with. I said we're starting on we're not going to talk about our strategy. I said it's on YouTube. You could make reference to that if you want to see. Then I said the topic for today is rules and risk management. Then I said what are your rules? What is your strategy? And I said stick to your rules and strategy. Then I began to list our strategies. I said SMC, ICT, psych levels, price actions. These are the things that works in our strategy, and this is about winning. Okay, just use a strategy that makes you win. We're not saying that you must use our strategy. We'll use the one that makes you win. So I'm going to share the trading view application because I want to share the entire window on the entire screen, but it's not working out. So I'm going to be sharing in different times. So now we are on the trading view application. So on this trading view app, I'm going to show you what I mean when I'm talking about sticking to strategy. Let me just turn on, instead of start drawing all those BOS and all, let me just turn on the smart money indicator, so I could just show you what I was talking about by Lux Argo, in case you're wondering the one we use, Lux Argo. Now this is what I mean by sticking to your rule. Sticking to your rule. Let me turn on pivots, because that was what made a lot of us to go bearish, or let me say a lot of you, because I didn't even go bearish. Now look at this point. Most people went bearish here yesterday. I didn't, though I was busy. Now my confirmation will be on the 3 minutes. That's why it's good to stick to your rules. It will be on the 3 minutes. So if I must go in with that entry, this is the only thing that will make me go in. Because there's a bullish change of character here. And my rule is I don't go bearish when I see a bullish change of character and a bullish change and break of structure. I don't do that. I must have another confirmation. So this is my confirmation. If I was going to take it, I was kind of busy, so I couldn't check this. Okay, I was doing quite some things in the house. So, but if I was going to take it, I'm showing you the rules now. The rules is there's going to be a change of character that will alter the previous. So this would have been my entry. The sum that took from here. You're looking for trouble. So that's why I'm hitting on rules today. This is against your rule. A smart money trader, you don't take entry from here. Now you say, oh, I took it, it worked for me, I was correct. Don't worry. You keep breaking your rules, you're going to get in trouble. Because there's going to be another time you're going to feel that taking the trade here was okay because this is a kill zone. Of course, this was a kill zone. You can see the big move from here to here. So it was literally a kill zone. You can see the move from here to here. So you might say, oh, I want to do again questions and contributions from you all. So I always show you what the rule is. The rule is that anytime there is a change of character, bullish, anytime there's a bullish break of structure, thank God my screen is up. You are to go bullish, you are not to go bearish. But if for any reason you want to go bearish, you must have a bearish confirmation. There was an entry that one of my mentees wanted to take. I think it was this entry. Okay, it was this. He wanted to take this entry, and he posted that in one of our group, I think the special traders group, and he said he wanted to take this entry, and I commented on that. I talked about sticking to the rules, I talked about being careful, I talked about getting more confirmations. The reason is because on many times I've seen where price gets to this point and deepens. I think this was how he made his entry. Okay, this is 3 minutes, so we can't see the news, so I'm going to switch it to 15 minutes, which happens to be our entry time frame, so that we can see the news very clear. So this, I think this was his entry. He was thinking of taking stop loss just after the order block. Then let me go to 15 minutes so you can see the news. Remember, we don't trade news. Was it 15 minutes? I don't think that was the entry. This was the entry, please. 3 minutes didn't make me see it very well. This was his entry. Just from here, he wanted to go to this point, right? Then his stop loss was just under this. So for risk management, you know, I said I was going to talk on risk management and rules. For risk management, what is this? What is he risking from here? He's risking. Okay, this is a good risk. Okay. When I talk about risk, I'll explain on that. But that's a good risk. So my concern with what I posted was, as a smart money trader, most times we prefer to enter from places that have liquidity. I did a video on 3 common mistakes traders make. You can make reference to the video. I'm going to explain there. This is actually the best entry for this trade. So the smart money trader, most times smart money traders wait here because there is smart money here. There's a lot of money here. So this money will most likely move the bulls. Same thing with this point. Same thing with this point.
Okay.
But you don't just go in, you have to have a confirmation. That's why I'm always on one particular mentee who will just come, put an entry like 3 days time. Okay, I think I'm exaggerating. Maybe 4 hours time. He just come and put an entry. Then he will say, this is my outlook. I'm open on entering here. Don't do that. You don't own the market. You don't control the market. I've shared many times. I've even shared a couple of videos about Dr. David when he said somebody might just have broken a pipeline. He's talking about trading oil, right? But that's like an indicator that in the GU, that's GPP USD trade, somebody might just be blowing an account. Okay, that's also like a pipeline. And when the person is trying to blow his account, they can manipulate the person. I have to admit someone. Okay, welcome. So AI will try to manipulate the person, and in trying to manipulate the person, AI will mess your entry up. Don't you understand? So what keeps you safe is confirmations, rules. So the price gets there. You're not hoping on the future. Make an entry and then you go play and go sleep. You're going to mess your trades up. Take entries at the time, at the moment, as a day trader. Maybe when you've now amassed so much wealth, you could be doing this kind of long trades, which eventually might turn out after all. So because of that, if you're making entries like this, you're looking for trouble. So there was a time he said price took him out. I said, what were you expecting? Listen, in trading, Dr. Dave will say the big fellas. There are institutions, what they are looking for is your money. So when this is how the institutions trade, let me show you. They come here, they say, okay, there's money here. There's money here. There's money here. So what they do is they wait for you to clear your money before they move in. So they're always looking out for people like this whose stop loss has not been protected by rules, by strategy, by risk. They're going to blow up that person and then they make the move. That's what the big fellas do in trading. They're not like us retail traders. We don't trade like that. As a retail trader, our advantage is edge. So any retail trader who doesn't have an edge, you will not be long in these markets and you will never be profitable. You have to have an edge. So when I was speaking to the other person and I'm saying, okay, before you go in, have some informations, then I didn't even know that there was going to be news at this time. So what happened was, because the news wasn't I think it wasn't listed on Forex Factory. So I think it was listed on a particular application. So this was yesterday. You can see that on Forex Factory there was no high impact news for 2:30. It was just the Canadian high impact news. So, but you know all these things. It affected this trade, and then there was a high impact move here. I think some other softwares might indicate this. So that's why sometimes when you use Forex Factory, check some other news, like I think invest.com. I think invest.com. Okay, so that you can be able to be more updated in case Forex Factory is not taking that particular. I'm trying to confirm this what's it called, if this is the right website. I don't think that's the right website. That's what the domain took me somewhere. Let me see if it's investment. Either investment.com or invest.com. I'll confirm it. Then when I confirm, I'll post it on the mentees platform, the mentorship platform, where you can be able to now see that, oh, in case Forex Factory does not bring me this information. So because that also happened at that particular time. Where is this? Okay, I'm sure you're not seeing the browser because all my windows are not being shared. It's just the, but I'll share it if it opened. I haven't gone to the website. When I get it, I'll let you know what I mean. Let me just check Forex news. Okay, so that's coming up. Let me just quickly say what I was saying. So I was like, be careful, because I was looking to things. If this is not enough liquidity, price might dip in here. If you're entering from here, it might just dip in you to this point, okay, and to this point, and to this point, and then you're like, oh, I think I'm gonna get out of this trade. Maybe if they don't find enough liquidity, they might come here, because I see a liquidity here. So that's why I say be careful. Let's see what happened. There was news, So price came, the moment it touched the order block, it just got rejected. It got rejected. Okay, I think someone just posted. That's Brother Williams. Okay, so he already posted some of the websites, and I think the website is the one he wrote. Okay, I already googled it, so it brought out investing.com as the number one search. So I've just clicked on investing.com. I don't want to take you there, please. Just open it on your phone. Investing.com. That's another one he posted for those of you that are on that platform. So now, this is what I was looking at. The news pushed these markets. That's not my trade, my rule. I don't trade news. I said I'm gambling, so I cannot say, oh, look at what I missed. That's the problem with some traders. As a smart trader, you don't look at missed move. You look at the move that takes you to liquidity. Like for instance, this move took us to liquidity. Okay, now look at, okay, this was his entry. Let me shift it first. Let me show you my entry. When this happened, I didn't have any confirmation here. There was a change of character here. There was a change of character here. There was a change of character here. So the moment this happened and I saw another change of character here, that was my confirmation. Because in this side, I have confirmed that this is a range, and because it's a range and price is coming from this liquidity points, this order block, and give another order block, yes, definitely the price will come and test this order block. But before it does, it will first of all swipe liquidity at this up part, and that was why I took that entry that I took. For those of you who saw when I posted it, I looked at this change of character. I came to the POI and I just picked an entry. This was the entry I picked, and then my stop loss was just at the tip of the order block, just after the POI. Then I used my Fibonacci to confirm that move. So how did I? Someone is trying to come into the meeting. Let me admit the person, please. Okay, that's Joe. How did I confirm with Fibonacci? This is what was the move? Okay, it started from here, then it went like this. Did you see that? It went like this. This was the move. So if I use my Fibonacci, okay, this will be my discount. This will be my premium. So any side in my discount, my POI, from here to here is my entry. This is the POI. My stop loss will just be at this point. And it's Friday, so I don't want to risk much. And it just went straight, hit the TP. And that was a good entry. And the moment it hit TP, remember I told you something before this. I said it's a range, right? And I said because it's a range, price is most likely going to sweep liquidity. Let me be sure the class is still on. Price is going to sweep liquidity here and still come back. Yeah, because there's an order block here. This order block has to feel the impact of the market, just as this has felt. So I was expecting price to come to this point, but it's Friday. Okay, so what I did was, the moment I hit TP, I came again. I waited. I saw a change of character here. I looked for a POI. I took an entry. I took this entry, and I was expecting it to come back to the order block. But this is a ranging market. What is a ranging market? Let me show you. This is what a ranging market is. It's going to be like this. This is the structure of a ranging market. Okay, this is the structure of a ranging market. So there's going to be something that makes it hits and come back, hits and come back. That's what's happening here, until any of these two liquidity points are taken away. Until liquidity is enough here and is enough here, and price decides to pull out. So that range was what made me to go like this, and because it's Friday, I didn't go very far. Just a little move here, and I was out. How did I confound it? Going out. 3 minutes. 3 minutes. Okay. 3 minutes. Then went to 1 minute. Okay. You see? 1 minute. 3 minutes. So I'm seeing this. So I'm like, okay. No, not there, sorry. So I'm like, okay. I come in here. Not there, sorry. It's here. So I'm like, okay. I come in here. Okay. So this was a weak low. There was another block here. That was my TP. For partials. That's risk management. So let me just go into risk management. I'm done with rules. I've said a lot of things about rules. So that's my risk management. So let me now talk on risk management. Let me just turn on these let me quickly turn on these fair value gap and fair value gap and then discount and premium. Okay, turned on, because I'm going to use it to show you something. So now, if okay, it's not showing here because it has moved. Anytime price is on a weak low, it's not going to push this weak low too far. Anytime price is on a strong high, it's not going to push it too far. That's one risk you should always pay attention to. At this point, there was a weak low. I knew it was not going to go too far. If, for instance, the weak low was about this point, that's why I love those indicators. Now, I could have said, Victor, at your level now, stop using indicators. You know why I use indicator? We're dealing with AI. These indicators are AI. These indicators have a way of understanding. AI understands AI. So, in my brain, I might be feeling that, okay. That's one of the things I began to have with Jeffrey Benson's psychological strategy. How far should we go? How far? So I'm seeing another block. I'm seeing a weak low. I'm like, this is partial. This is partial. For risk management, what I'm going to say is, let me share the notes. What I'm going to say is, on the notes, right? That should be the note here. For risk management, what I'm going to say is, stick to reducing your risk all the time. Always stick to reducing your risk. For instance, we want to take an entry like a $5,000 account. I will not do that calculation because of time. A $5,000 account that wants to take an entry and it wants to use a 20 pips stop loss, okay, and it's targeting, let's say, 40 pips, 1:2, right? Risk reward ratio. What is expected of this guy? Of course, this guy can use 0.24 standard lots. If you do the calculation, you see what I mean. If he's risking 1%, and this 0.2 standard lot is going to be risking just about $45. So if he hits stop loss, he's going to be losing $45. But if he hits take profits, because it's 1:2, this guy should be expecting $90 for this entry. So one way to reduce your risk always, I hope the class is still on. Okay, the class is still on. One way to reduce your risk always is you have to divide your standard lots. Sometimes you gotta divide it by 2. Sometimes you gotta divide it by 3. If you divide this by 2, to give you 0.12, right? So you go to enter first. So let's go to the chart now. I've written what I want to write on the note, so I'm going to take out the note now and go straight to the chart. So you divide that standard lot. This reducing your risk. As a good risk manager, always reduce your risk. Some of us managing some accounts like that, when I keep telling you reduce your risk, that's my reason. As AI is always looking for that guy whose risk is bad, that person becomes the liquidity. You know what happens? Somebody that tempers with pipeline. You temper with pipeline, there's a fire outbreak, that person will die first. So the guy who breaks his rules, who breaks the risk, is the first person to be endangered. That's how it is. So let me show you something now. How do I show you this? Okay, now let's use this. So let's take, for instance, this entry was made with a 0.12 standard lot for a 5k account, like I just explained to you just now. Let me increase the text so you can see it very well on your screen. So let's say we come in with a 0.2 standard lot from here, then this trade came here, okay, and then there's TP here. Count how many pips has moved from here to here. We have moved what? 12 pips. Remember, we were targeting, remember 20 pips loss is $45, right? Okay, so if we've catched 12 pips, if we've caught 12 pips, sorry, that means we have we should have more than half of that 45. So half of 45 should be 22.5. So, and that 22.5 is more than so what we have is more than half, so we should have about 25. So if you have taken profit of $25 here with 0.12 standard lots, knowing that you were expecting price to go up, you will wait for the retest, right? You go in again with 0.12. What happens? You get another 25. Tell me, 25 plus 25 is what? 25 plus 25 is 50. That's risk management. That's good risk management. 50. So you have $50. So you'll find that your P&L or your balance will increase. And then there's another guy who doesn't understand risk and is just there complaining. This is pure risk management. You got to go, don't always go in with the big lots. Always divide it, either by 2, either by 3. Now let me even give you another secret again. If you're going to catch a big move, let's go to 15 minutes. Let me show you that big move we caught. Let me show you how you can just be wealthy with just one move. You don't need all the moves. I think it was from here. It was from here. Imagine taking this trade from here. This should be stop loss. This should be okay. I'll close with this. Imagine taking this trade from here. You go 0.12 here. You don't go in with everything. 0.12 here.
Okay, screen is not showing.
That text is not needed. Get out. Thank you. Okay. You're going with 0.12 here. What do you do? Let me clone it. You're going with another 0.12 here. When you increase your lot, you reduce your risk. So you're going to change your stop loss. You increase the lot, you reduce your risk. So this stop loss for this is here. The second stop loss can be here. Why is this so? Because this is a trend. You take another one here. Why did we enter here? There's a break of structure. Why did we enter here? There's another break of structure. So you have 0.2, 0.2, 0.2. So all of these now is 0.36. 0.36 for how many pips? Do you know how many pips is this? This is 99 pips. So you might not have caught everything from here because you are managing your risk. But I tell you, by the time you're done with this trade, you should have at least 150. That guy that doesn't know his risk, that guy is a friend to AI. AI will always look out for that guy. AI will always go for that guy. And that guy always forms the liquidity in the market. So the big fellas, there has to be money in the market. There has to be. And that guy was going to be the one that will give that money. So that's what I want to show you on risk. The other one I wanted to show you on risk is stop loss. There's some stop losses you cannot use for small accounts like $10, $100, and then there are some stop loss you can actually use for bigger accounts. So you got to know that, and that's the problem with some people in some signal groups. You're in a signal group where the mentor is trading $100,000. It gives you a 40 pip stop loss, and you don't understand risk management. You just take it. You just take it. Another thing again with risk management which you must know is, for instance, you take a trade. Let's say this is an entry. You take this trade and price just came down. Unexpectedly just went straight to your stop loss. Take it. Take your loss. Don't come and say, I did not know that price was going to go to my... That you are not a good trader. Your loss should have been calculated before you entered. With what I have taught you about dividing your entry, you'll notice that when price comes to hit your stop loss, instead of losing $45, because you have divided your loss into 3, you'll be losing $45 divided by 3. So you're not going to be losing $45, you're going to be losing $45 divided by 3, which is you have reduced your loss. And in that way you can look out for another entry which can now serve as a recovery entry. So that's all we can take. That's all we can take for this class. So I'm going to go back to my notes and I'm going to note your few suggestions and contributions. Okay, so with questions time, contribution, or suggestions. Okay, so anyone, you have a question, you have a contribution, a suggestion, please, you can unmute your mic and speak. Let's deal with this before our time goes off.
Yeah, I don't know. Alex has something to say.
Sorry, I was on a microphone. Speak, I can hear you now.
I thought Alex wanted to speak, but since it's not going, let me go in. Thanks so much, Pastor. Regarding the last, yes, this second the last thing you mentioned about second the last point you mentioned about moving in with a particular divided lots. I just came to that app and I actually see what you're showing, so maybe when you could repeat it later on. But anyway, that is what I was jotting down when you were speaking.
No, now I said a lot of things. I will not be able to repeat that. What we'll do is, this class is being recorded.
Okay.
So you can just go to that place, just make reference to what I showed there, because I displayed a lot of things, and you will see it. That's why the class is recorded. Okay. Your second note.
It was the last time that we had last year that we had the meeting on few zones where we have talked about breaking of high or low, but Asian high or low, then taking that as into the London section. I've actually looking out for that throughout this year, and I've not actually seen that work out. So I know that you have anything to say about that. Then what I want to ask at that point was, what do you have to say about regarding previous day high and previous day low? Like if it's being taken out day or something.
A good thing is that I'm happy that Brother Williams is here, so people can actually learn from the answer. Why? The only thing I can say before I give Brother Williams the opportunity to answer you is I'm a smart trader. I'm a smart trader. If you look at my strategy right from when you knew my strategy, you'll notice that I keep improving that just by just becoming smart in the market. So as a smart trader, I pay attention to things like Jeffrey Benson would say, when this psychological level gives me an M pattern, I'm going long, I'm going short. How long can you go? How short can you go? That's where my smart trading questions come in. So it's smart trading that tells me, okay, this is where you should stop, break even. You see, before price reverses. Can you tell me where price would reverse? Can you tell me where price might grab full liquidity and change direction? Can you tell me where the retracement is? This is where smart trading comes in. That's why I love smart money concept and ICT. Now also when it comes to ICT, the ICT kill zones does not always work like that. I remember Brajo taught us when he was teaching us that it will not always, it's not every time where the London high breaks the Asian high that the London high becomes the high for the day. It's not always going to be like that. So the question is, how do you now know that today London high will be the only high for the day, so that I can hold a strong position on that high of that day to carry me to my dreamland? Let me show you something on the screen. I just turned off the notes. Let me go to the chart so I can show you what I mean there. How do you now know that, okay, this particular London for this particular day what's wrong with trading view? Okay, it's up. So how do I know that this particular London will be the high for the day? As you can see, this one has disappointed a lot of people, because those people expecting the Q zone here, this is not even the factor here. The factor is that the low cannot break the low of the Asia. The factor is that the low should be around within the Asian region, then the high should be just above the high of the Asian, and then gives us the high for the day. So we can't even use this. Let me go backward a little bit. Now let me take out all these drawings, right? Let me take out all the drawings. Let's see, there was none here, and I'm sure you were looking out for it here. You didn't get it. You were looking out for it here. You didn't get it. That's why I said I'm a smart trader, and as a smart trader, I'm not concerned about the Q zones just alone. Yes, I'm interested in the Q zones, but I'm also interested in the fact that there's no confirmation. Look at this place. There's no confirmation that this London low was going to be the Q zone, because there is a change, a bearish change of character here. There's a bearish break of structure here. There's no confirmation, except there's a bullish confirmation. That's where I can know that this is the Q zone for that London session. Then I'll be expecting the New York Q zone. What's the New York Q zone? The New York Q zone is that anytime London gives that low Q zone, it goes up. New York is going to be bullish, and it's the otherwise. When London is bearish, New York goes bearish. So you can see. So for me, before I hand over to Brajo, if I'm going to consider the Q zone, I first must remember the meeting ends in 15 minutes. I first must remember that my my factors, my smart money factors, price action factors, psychological factors do not confirm me that this will give me a kill zone. I know that that day is not kill zone day. So because of that, I've not really missed kill zones. I'm able to know a kill zone. So my advice for you, Recletus, is pay attention to your rules. Your rules will tell you the kill zones. Don't just be expecting over to kill zone guru. And that's esteemed brother Joel to give you what you want to hear. Okay? Rajel, please could you answer esteemed brother Cletus regarding kill zone? I'm going to give you opportunity to share your screen.
Oh, okay, sir. Good afternoon, sir. Can you hear me, sir?
Yes, we can hear you. Go ahead.
I don't think I can share my screen because I'm not close to my laptop at the moment. I'm actually working house, but I think I'll just explain it better.
Okay.
PC. Yeah. Okay, so one thing people have to understand in trading is time. And if the chart repeats same way every single day, then everybody will be millionaires in this market. You understand? So one thing you have to understand is you need, like Pastor said, you need to be smart. You understand? To be actually able to make money in the market. And I talked about Q-zones. I think that was last year. And Q-zones is actually one of the tools that actually use in trading. That's not illegal. You understand? These are one of my entry techniques and criteria of how I execute trades based on the pre-existing bias. You understand? I set up the pre-existing bias. So before going into the market, you understand, I have a roadmap. I do pre-market analysis. I know the fundamentals. I do my technicals, my higher time frame analysis. Have an anticipation as to where prices should go to for that particular day. You understand? So if I'm expecting bullish prices for a particular day, those are one of the entry criteria I look out for. Let's say I come into the trade into the market by 6 a.m. and based on my analysis, I'm expecting a bullish day for J. One of my entry criteria is I'll be expecting London to take out Asian liquidity, that's Asian lows, before I look for a reconstruction or change of character to the upside before I look for an entry. That is when it does not happen every single day. But if you check the chart on, I know we don't trade the euro, yeah, but if you check the chart on Wednesday and Thursday on Euro USD, it played out perfectly. Price took out Asian highs, traded into a supply area, and we sold from there. Same thing on Thursday, did the same. So these things actually play out every single day in the chart. Just that you not be playing out in the market, you have to be looking at that particular time. Like it didn't play out on G on Thursday, but it played out on E on Wednesday and Thursday. So now when you trade, you should have an outlook, then you should mix. You understand? So what I shared with you, one of the entry techniques, it does not mean that if you don't see it in the market, you're not actually going to trade. Or if you don't see it in the market, you're actually not going to trade. You should have a lot of things in your arsenal. You understand? That's actually one of the things you should do. If you actually want to incorporate it into your trading style, that should technically be only thing you should be looking at first coming in at least remove one analysis, higher time frame or price of analysis. After that, these are some things you should look out for. For example, base your without enter the market, you are get stored in the corner. So, what is that the market once every year, every planet wins today is not the way to win tomorrow. But when you understand this thing, when you see it from it gives you an edge. You understand? This is like an edge in the market. When you see this kind of things based on the existence.
On the London session is going to experience a high impact Monday morning already. That alone shows that there are going to be some kind of transactions. I see high impact news as transactions. So in a week where there is no much high impact news, is as though there's no much transactions. So maybe no much money came into the market. So in a week where you're already seeing that the London session is showing you that there will be a lot of transactions in London, what do you expect already? You begin to envision to see, oh, most likely this week is going to be some moves. Because let me tell you, the truth is, let's assume the week that just ended that was a bit slow. There are some people who wanted to make more money that didn't make more money. These people will want to push the market. Can this market just move a little bit more in the coming week? Let's make some money, you know. So your own there is just to smartly see how you can take your own chunk of the market. So that's it. Thank you so much, esteemed Brajo, for that wise answer, and thank you, Cletus, for being satisfied by the answer. The time might disconnect us because we have a short time to be out of this meeting. So just in case, we can go to the WhatsApp and complete in case there's anybody whose questions or suggestion was not taken, so everybody can be carried along. So Cletus, are you satisfied by this last answer?
Yes, I am, sir.
Okay, any other person you have a question, a contribution? Now, Cletus, do you want to say something more?
I have one other thing I wanted to confirm too.
All right, I'm listening.
I'm not sure whether it was because of the move that happened on Friday.
Okay.
So I'm not sure whether it was because of the move that happened on Friday. What
Okay.
happened is that I was for I was trying to confirm move that was going up. So and the low the low was strong, and since the low was strong and the high was expecting the market to start moving to 1 minute.
Is it my network or Cletus' network?
So I was really, but instead it's still pushing. Can you hear?
It's breaking. Finish.
Can anyone hear me?
Yeah, we can hear you, but it's breaking for me. I don't know if it's my side.
Okay, so the looking out for it,
It
expecting
kept
it
on
that
pushing,
it give me a reversal signal and start going up, but it kept on pushing, and it
That's
started
what we call dipping.
drastically going up. I so
That's what I meant when
okay.
I said in the course of the week that this might deepen your entry. Yeah, there are times like that. Now, listen, this is the reason why most traders don't use indicators. Indicators lag. The word is lagging. So you find an indicator telling you that this is the strong high, and then suddenly you just find the strong high just shifting. You're not like, why didn't you tell me that this strong high was going to shift a little bit? That's what indicators do. They lag. Sometimes they are not fast to show you the entry. That's why some traders don't like to use indicators. So that's why it's important you understand the basics, even though you're going to use indicators. I understand the basics already. So using indicator is just like identification to reduce my stress in drawings. So sometimes when you see a strong low like that, look for more confirmations. That's what's going to give you an edge. Like you heard Brother Williams, and I've said it many times, couple of times. What will make you win in the market is not strong low, strong high. What will make you win in the market is having an edge. The people that win and profitable are people who have an edge. Market doesn't want you to win actually, so just have an edge. Something like this. This has been a strong low initially. I'm sharing screen. This has been a strong low for many times. For a long time. I hope the meeting is still on. Okay, the meeting might be indicator. An indicator is not supposed to hold you. What if the indicator was wrong? Look out for other factors. This is a strong low. Are you aware that price can come here, test this low? If it finds that liquidity is not enough, this strong low will change to weak low. So you'll not be wondering what's wrong with you, indicator. Why didn't you tell me this was a weak low? Because indicators lag. Indicators lag. You must know that. So if it changes to weak low, what it means is you would have waited. You got to get more confirmation. Sometimes you have to come down to 3 minutes. You have to come down to 3 minutes, and then you got to look. And if you look at the 3 minutes, you see that this is a strong low. For me, in recent times, seeing a strong low and a weak high, a strong low coming this close, this is a bullish move for me with the experience I've had. Even though I'm going to need some confirmation to complete this assumption, but this is a bullish move for me. Okay, there's a trend here, so this is the trend. So price is resting on the trend line. Sorry, please, my network. So you can see price is resting on the trend line. Okay, for me this is a bullish move, but someone else is on the 15 minutes paying attention to one strong low. What if price doesn't go there? So please look out for many confirmations. Sometimes you're not seeing a confirmation on the time frame where you are. You have to go to either a higher time frame. Take note of higher time frames confirmations. They take time. So you cannot say, oh, I saw a break of structure on a 1 hour, so this is the move. 1 hour break of structure is going to take some time. So you just look at it and see, okay, this is it. Go down to a lower time frame, which is the happening now, to now ascertain that, okay, there's another break of structure in the 15 minutes, there's another one in the 3 minutes, there's another one in the 1 minute. So this is what it is. So you got to look out for those confirmations before you conclude. So this will be all that we can take. I don't know why my network is like this, but this is all we can take for today's class. I think we've spent quite some time. If we haven't even spent time in this class, it's 40 minutes. So this is like the longest we've had in a long time. 45 minutes in a class. So I would suggest we just close here. If there are more things you want to probably understand, look out for our next class. Then also look out for a Monday weekly analysis, which is going to be starting at exactly 6 a.m. in the morning. So you got to join, and we're going to take it up from there. So until then, keep enjoying your weekend.